Hi, Aman and David Finlay here from Harcourts, bringing you another property market update. Today, we will be talking about market stats, off-the-plan sales versus completed bill sales, triple CFA and MDRS, development projects and joint ventures. The national average property value fell to 2.9% in the last 3 months to 1.064 million. The latest set of figures shows the impact of rising interest rate, inflation and triple CFA. Buyers have taken a step back and certainly not acting with urgency. Here at Team Aman and Joe, we sold 21 properties worth over 24 million in the month of June. 57% of those properties sold were the brand new properties, 14% were development sites, and the rest 29% of the properties sold were existing residential houses.
And I think those are some really telling stats in this market. If we look at what's actually selling and where the buyer sentiment is, a lot of guys want a transaction where they're actually moving into a house pretty quickly. The off-the-plan sales on things that haven't been completed, still RCBC EPA stage, they're really tough to get across the line. We have sold a couple of whole developments to individual buyers, whether they be government entities or other. So if you do have a big site where you want to sell down the entire amount, please get in touch with us. But to the general market, the investors, the first home buyers, they're looking for tangible product. They're looking for something to move into and move into quickly. So you can tell just by your stats alone, those developments that actually completed and then we sold when the house was just about to be issued title, we got a much better price, many more buyers, and just the whole sentiment in the market was that's what they were after. The results were so much better. And the prices were better than the vendors were getting for the off-the-plan sales, as you'd expect. So it actually made it still more financially viable for the developers to complete the product, if you can with finance, and then sell at the end.
Triple CFA is being relaxed this month, but further interest rate rise are certain. That will likely counter any increased appetite for the buyers due to these changes in triple CFA.
Touching on those triple CFA changes and the interest rates, there's a lot of experts out there that are giving pretty similar sentiments around the slight drop in house prices. How long for, though? That's the crystal ball. If I was out in the market right now, I wouldn't be waiting to find out when the final dip in the market is before it starts to rise. If you're buying and selling in the market, you're pretty safe at the moment. I still think there's a little bit of movement to go, but whether it's 6 months, 12 months, or 24 months, changes depending on which expert you listen to at the moment. And then the only other really big opportunity we've got at the moment, which is getting real market traction, is for those developers or those mum and dads out there that want to be the developers. We do run a business called Development Projects, which has a JV opportunity where we've got a team of expert developers that can take you through the entire process. You provide the land and we'll do the entire development for you. So if you do have any interest there, get in touch. I know the market at the moment isn't ideal for developments and development sites, as is the sentiment in the media, but now is the ideal time to get everything in a row so that in 24 months from now, when the development's coming to completion, you're hitting the higher market. So now is the perfect time to start getting into developments if you already own the land, because it's going to take 9 to 12 months before you get resource or building consent anyway. So if that is of interest to you, if you do own a bit of land, you're not sure what to do with it, you're not a developer, please get in touch. We've got experts that build over 500 houses a year in the development space that are JVing with us and with you to get those projects done.
Thanks for watching. See you next time.